A 60-cent AI stock and a $4 AI stock, both connected to the same industry creating trillion-dollar companies. That doesn't make sense, and that's exactly the point. Because while everyone is chasing AI giants, some of the infrastructure behind them is still trading at extremely low valuations. Now, this is where things get interesting. Are these just ignored small-cap stocks or early AI plays the market hasn't caught up to yet? Let's break them down. AI is no longer just a software trend. It's becoming a full-scale infrastructure expansion. We're seeing growth across real-time communication systems, enterprise automation, data processing, and digital platforms. But here's the part that most people miss. Investor attention is concentrated on the biggest AI companies, the ones building models or selling chips. Meanwhile, the companies enabling communication, data flow, and enterprise integration often receive far less attention. This is where pricing inefficiencies usually exist, and historically, this is the type of layer institutions quietly watch before broader awareness appears. Now, this doesn't guarantee anything, but it explains why certain smaller companies become relevant later in the AI cycle. And this is exactly where smaller cap opportunities tend to form. Think about how AI actually interacts with the real world, not just generating answers, but enabling real-time communication, voice assistants, live streaming, interactive AI agents. All of this depends on one critical layer: real-time data transmission. But here's the catch. AI systems don't just need intelligence, they need instant communication between users, devices, and servers. And this is where things get interesting. One company is building the infrastructure that allows real-time voice, video, and data to flow seamlessly. And later, we'll look at another company focused on a completely different layer: enterprise AI automation. Real-time communication is becoming essential for AI applications. AI agents need to respond instantly. Streaming platforms rely on low-latency systems. Interactive applications depend on seamless data flow. If AI adoption continues expanding, real-time infrastructure becomes critical. Because if this layer scales, companies enabling that communication naturally become more important. This stock has seen major fluctuations. At earlier stages, shares traded significantly higher during strong growth in communication platforms. Then, the stock pulled back as tech valuations cooled. Today, it trades around $3.74 per share. So now the question becomes, if real-time AI applications continue expanding, could companies like this regain attention? The company provides APIs and infrastructure that enable developers to build real-time communication into apps, including voice, video, and live interaction systems. These are core components in many AI-driven applications. And when you actually look at the company behind this, you find Agora Inc. Ticker API, currently trading around $3.74 per share. Now, obviously, this doesn't mean it moves tomorrow. Competition in communication infrastructure is strong, and scaling globally comes with challenges. There are risks here. But the reason it remains relatively small could be because the market is still focused on more visible AI segments, and timing is always the key factor. Now, before we get into the second stock, here's something most people completely overlook. Even though AI demand is accelerating globally, many infrastructure companies still experience delayed market recognition. And historically, those delays are where smaller cap opportunities sometimes appear. But unlike the first company, which focuses on real-time communication infrastructure, this one operates in a completely different layer. Enterprise transformation. Where the first enables AI interaction, this one helps companies integrate AI into their operations. And this is where things get interesting. Businesses today are trying to adopt AI across workflows, from data processing to decision-making systems. But integrating AI into real operations is complex, that's where this company comes in. It helps organizations build and manage systems that integrate AI into business processes. If AI adoption continues across enterprises, companies helping businesses implement AI solutions become increasingly relevant. Because AI isn't just about technology, it's about execution inside organizations. This stock has also experienced volatility. At earlier points, shares traded higher as enterprise tech demand increased, then pulled back as small cap markets weakened. Today, it trades around 0.59 per share. So again, the question becomes, if enterprise AI adoption accelerates, could this type of company regain attention? And this is where it gets interesting, because the company behind this model is Ares Technology Inc., ticker AERT, currently trading around 0.59 per share. Again, this doesn't guarantee anything. Enterprise transformation is competitive, and execution matters. There are real risks here, but the gap between AI adoption and market attention may explain why companies like this remain under the radar. So now we have two very different AI plays. One operates in real-time communication infrastructure. The other focuses on enterprise AI integration. The first benefits if AI becomes more interactive and real-time. The second benefits if AI adoption spreads deeper into business operations. So the key question becomes, which layer scales faster? Real-time AI communication or enterprise AI transformation? That tension is exactly what makes these types of opportunities interesting. Stepping back, both companies operate in parts of the AI ecosystem that don't always get immediate attention. Not the headlines, not the models, but the infrastructure layers behind them. Historically, these layers tend to move later, but when they do, they can move more aggressively as the market begins pricing in their role. And this is exactly the type of layer institutions quietly watch. If you want to keep discovering smaller AI companies before they reach broader attention, stay tuned. Because sometimes the most interesting opportunities exist in the parts of the market most investors overlook first.